Welcome to this segment of GTM Training Shorts presented by GTM Training Institute, your source for comprehensive income tax compliance and tax provision learning and development. My name is Frank Nieves, Director and Practice Leader. Corporate tax can be complex, and understanding its terms and concepts can be challenging. GTM Training Shorts aims to simplify complex content into concise and comprehensible segments. In this short, we will address the question, what is ASC 740? Listen in to Mike DiBianca, Managing Director, as he explains.
When people ask about ASC 740 and accounting for income taxes, it's a topic within the FASB Accounting Standard Board guidance that determines U.S. generally accepted accounting principles. And the FASB is an independent, non-for-profit organization that establishes financial accounting and reporting standards for public and private companies, and also for non-for-profit organizations that follow generally accepted accounting principles, or GAAP. So the FASB has codified the accounting standards and listed it by topic, and ASC 740 is a topic within those accounting standards. It accounts for income taxes, and there can be some complexity around determining if an item is an income tax or if it's not an income tax. And some of that work can require a lot of time in certain cases, but it's important to know because if it's not an income tax, it will not be covered under this topic, ASC 740. The objectives within ASC 740 are to recognize the amount of taxes payable or refundable for the current year, so your income tax payable or receivable account, and to recognize deferred tax assets and liabilities for the future tax consequences of events that have been recognized in the financial statements or tax returns. There can be, and there is generally, a lot of work required around accounting for deferred tax assets and liabilities. There is equivalent amount of work required on the current income tax payable or receivable account. However, sometimes there can be a little less complexity because you can tie that in certain cases to a tax return or something that's been filed to confirm that account. However, the future tax effect for deferred tax assets and liabilities can require extensive work in most cases. So that's what we talk about, the basic principles and summary below, kind of refreshing that the current tax liability or asset is recognized for the estimated tax payable or refundable on a tax return for the current year. And then the deferred tax asset or liability is the future tax effect. And two other points noted is the measurement of current tax and DTA DTLs are based on the enacted tax law at the current point when you're measuring your deferred tax assets or liabilities, and also the requirement of DTAs to be adjusted for the amount that is expected to be realized based on available evidence at the measurement date. And please check out our other shorts describing deferred tax asset and deferred tax liabilities in a little more detail.
For more information on ASC 740 topics, check out our website for details on our corporate income tax provision ASC 740 programs. Scan the QR code or email me for additional information or to suggest a future topic. Don't forget to like and subscribe below. Thank you.